And it's all powered by Campbell Company Wealth Advisors and CPAs. We invite you to reach out at any time this weekend. We have a representative standing by to talk to you. 352-251-1015. Online at mycampbellandco.com. My name is Mark Owens. And Jackie, we got a call last weekend. Very excited about finally making the call. It sounds like that this young lady was ready to really start getting serious about her retirement plans. But I noticed that she had a million questions about that first appointment. Where do I go? Who am I going to meet with? What do I need to bring? How long is it going to take? There was this nervous energy in a good way, but this kind of excitement. But it's almost like that first day of school. You know, what can I expect? So I think it'd be a good place to get started this weekend here on Beyond the Money Radio and the Beyond the Money podcast. Walk me through that first consultation with you and the team.
Well, it all starts with the phone call, right? And then we're going to give you the directions. We've got 3 different locations. We're in Inverness on Highway 44. We're in Spring Hill. That's our flagship office, and that is right on US 19 in Hernando County. And then we have our Trinity location, which is right there at Trinity-Odessa line, right there on State Road 54. So you'll know exactly which office you're coming to, who you're going to be meeting with, and the very first appointment is going to have a questionnaire that we're going to give to you in advance to fill out. And that can be a little bit intimidating. I'm not going to lie. If it's your very first sit down with a financial advisor or retirement advisor, it might be a little bit overwhelming because, I mean, let's face it, we snatch and grab accounts and we have IRAs and we have 401ks, or we maybe have single accounts or individual accounts and joint accounts. And, we end up with money just all over the place, right? Very unorganized and not really orchestrated very well. So that is going to be the questionnaire. That'll be the very first thing. There's going to be a little checklist on there. There's 5 or 6 things that we're going to ask. If you have your legal documents, if you have your tax returns, to bring in your current account statements. So it's just really gathering your information, like everything about your financial life, and then coming in and having the conversation. You don't have to do a whole lot of math and other things before then, just bringing in your things that are on that checklist. And a lot of people do come in a little nervous. They come in with their shoulders like really, really high and, a little nervous on being judged, I think is a big part of it, right? Have I done enough for retirement? Are they going to think that I haven't done a good job? Are they going to see that I'm super unorganized? Well, guess what? We are like doctors. When you've seen one, you've seen them all, and we have seen everything. So, we are a no-judge zone. Whatever you've done or saved for retirement, however you bring it in, that is what it is. And let's just make the very best out of your puzzle pieces and put those things together and see what's missing or how we can improve that. And we'll look at what you're doing right and make recommendations to continue doing those. We'll look at some things that maybe you're missing or have overlooked, and we'll make some recommendations on what we think you should stop doing and start doing. And really, it all starts with having that conversation. But the very first meeting is super easy for you. It's just doing a little bit of homework and getting some of those documents together. And I had one couple that met with me, and they said, wow, it really took me a little bit longer than I anticipated, and I was a little intimidated because I thought, oh my goodness, I don't even know. I don't have a list of all the things that I own, all the dollars that I own in my accounts, or where they're at, or what the account numbers are. So, and everything's online now, so it's not like the old days where you have it all in a folder, in a file cabinet, so it may take a little longer to get prepared. But if you're super organized and you have those Excel spreadsheets and stuff, you're 99% of the way there. So it's just about, let's come in, have the conversation, and see what maybe we can do to improve your financial plan, your retirement plan.
And if you've saved at least $500,000 or more for your financial future, that's spread across your savings, a 401k, you're lucky to have a pension. That initial consultation, no cost, no obligation, from Jackie and the team at Campbell Company Wealth Advisors and CPAs. And you made the comment once, and it stuck with me. You said that it's like going to the dentist. When you lay down in that chair, you feel like it's the worst mouth that they're going to see. You don't take care of your teeth, maybe don't floss enough, and you're almost embarrassed by it. But it's pretty safe to say that dentist is going to look at you and say, you're not even close to the worst mouth that we're gonna see this year. It's the same way with your retirement portfolio. You may have made some financial mistakes in the past, and you feel like, Jackie, this is going to be the ugliest portfolio that you've ever had to work with. And I think it's safe to say that No, not so much. You've seen it all, Jackie, and you've worked with all types of budgets and portfolios. Is that fair to say?
I would say that is fair, except for the part about the dentist. I've never once in my life thought, I wonder what they're going to think about my teeth or my mouth. I worry about the noise of the drill or what they're going to do to me. So I think, it's all relative, right, to whatever you've gone through, whatever you come at. But you're right. I mean, having a no judge zone and having, we genuinely at Campbell Company want to help you and your family be the hero of your own financial story. I don't think that you can get any better than that, any simpler than that, and any more important than that. It's not about us being the hero. It's not about you feeling bad, us feeling good. It's about what can we do to help you succeed and accomplish your goals and kind of be aware and learn about those pitfalls that are coming along the way that we have seen thousands and thousands of times. Every birthday has a potential pitfall. Every tax law change has a potential advantage and a potential pitfall. It's how you would look at it and even being aware that it's even there. So we have that. That is our gift. That's our unique ability. Our team here at Campbell Company, we are very, very proactive in planning. And, if there's something that we have to work around, for example, someone that's worked at a company and they have half of their portfolio in the employer stock option plan, or it becomes like mom and apple pie to them, right? We can do anything with any other assets that we own, but it's not going to be that. Every single person, every family that comes in, yes, we see patterns. We see, certain things repeat, but no family puzzle has ever been identical. And it's just the way that you need to be treated, as if you have your own unique, individual, customized plan that's going to work for you and your family.
352-251-1015. We have one of our great representatives standing by right now. A couple of quick pieces of information. But the most important question they will ask you is, when is it convenient for you to sit down and have this conversation with Jackie and the team at one of the multiple locations of Campbell Company? 352-251-1015. Or always, we invite you to get more at mycampbellandco.com. And Jackie, you just mentioned birthdays. And when we were growing up, we'd always get that card in the mail from grandma or grandpa, and maybe $10 in there, maybe a $20 check in there. Now, as we get older, unfortunately, those checks stop coming on our birthday. But you mentioned that there are 6 birthdays that could save us thousands in the long haul. That's just as good as getting that check from grandma. How can these specific birthdays save us money?
Well, those are called tax birthdays, right? So I love confetti. I love celebrating the birthday month, not just the day, right?
Yes,
so
ma'am.
These are sometimes years that could be work to your best interest. And anytime you're talking about saving money, that's normally when somebody kind of ears perk up a little bit. So some of the ones that have stood out for our clients, 55. So 55. Double nickels, I mean, that is an early planning window opening. That is when you are actually maybe starting to think about retirement. Typically, people are going to start that process, right? Because you know that you're getting really close to the next decade. But here's the truth. The best tax opportunities happen way before you stop working. Don't wait till you're retiring. Don't wait till a month or 2 months or 6 months before you're going to retire. Let's start a few years in advance. So that's why by 50, 55, I really encourage somebody to start sitting down, having that conversation. The great thing about 55 is, one, you can get money out of certain retirement accounts if you separate from service or leave work and retire penalty free, taxable, but not penalty. Penalty free is the key thing there. That 10% penalty. You have more flexibility at 55, so that is a really big birthday. And I keep having the conversation with many people, Mark, that every dollar you have in your IRA, your 403B, 457, and your 401k, those pre-tax where you got the deduction all along when you were making those contributions, somebody will pay tax on every single dollar in those accounts someday. So it's very, very important to make sure that you're planning for the taxes, and 55 begins that tax planning journey.
All right. What's next for you on these tax birthdays that could save us money?
Well, it's 59 and a half. So I have seen some people celebrate 59 and a half lately. So it's kind of interesting that the word's getting out. But that is the first freedom birthday. That's when everyone has that 10% penalty-free exclusion come in if you take withdrawals from any of your retirement accounts. So 59 and a half is another big birthday. So if you're 58 and a half, or if you're 59, it doesn't count for the whole year. It is 59 and a half. I have seen it time and time again when tax season comes around and somebody took money out just a little bit before that 59 and a half birthday. And it is very, very painful to pay penalties to the Internal Revenue Service on top of the taxes that you have to pay. So if you need income, make sure that you're planning and make sure that you know about these big milestone birthdays.
All right, can you have another one? Sorry, can we add another one to this list of the big birthdays that can save us money and hopefully mitigate some of our taxes as well?
Yeah, 62. 62 is another big birthday. That's when Social Security becomes available. But it's a little bit more than just 62. 62, your 62nd year is the last year that you could take more income and have a higher income and tax return and it not impact your Medicare premiums. So even though you don't start Medicare until age 65, guess what? They look back 2 years to determine what your Medicare premiums are going to cost you and your spouse. So they're a little over $200 right now for Medicare, but plus your supplement. So insurance is going to cost a little bit more than that, but it can go up to significantly more than that. So based on your income in your 63rd year. So 62nd year of life is really, really important to plan for, because if you have a real estate that you're looking to sell, maybe a business that you're looking to sell, or maybe you have some other windfall, don't delay it till 63, 64, 65. Consider that for your 62nd year. So again, you're able to start claiming Social Security benefits and maybe turn that on and get a little extra income if you're working part-time or retired, but it's all part of the planning.
352-251-1015. As we're talking about the birthdays and the numbers that can save you money in your taxes, well, how about that number right there? That's how you reach out to Jackie Campbell and the team at Campbell Company. Have a long-form conversation about your tax strategy. 352-251-1015. 55, 59 and a half, 62. What's another milestone birthday?
65. 65 is probably the most celebrated birthday that I have seen any client ever really, really, they plan the whole year. And that is because of that Medicare opportunity. Even if you're still working, you potentially have the ability to go on Medicare, and that means less costly health insurance most of the time. So, let's face it, health insurance is one of those things that's just really out of control for everyone this year. And if somebody's premium went up $200 and $300 a month, a young person or a young family, with on a fixed income, that's really been really difficult to have conversations with some this year when the insurances went up for health insurance. But 65, that is one of the biggest birthdays, and it's also the year that you have to start paying attention to that IRMA, the income-related Medicare adjustments, and that is how much you're going to pay for those Medicare premiums. Just to give you an idea, like I said, it was about $200 a month for the Medicare Part B and D per person, right? So if you're married, that's times 2 if you're 65 or older. When your income goes higher, and of course, if you're a single tax filer versus a married filing joint, that's going to be a difference. But for example, if you go over the $212,000 is the approximate IRMA first step or first tier change, your premium is going to go from about $200 a month to about $270, $275. So that's a bit of adjustment. If you're married, that's times 2, but it can go up to $700 a month. So that's a significant change. And typically, Mark, I see this, somebody's around their 60s when they're retiring. That's probably a really common. I would say 62 to 65 is a really common retirement age. And then they will take out large sums from, maybe if you work for the state of Florida, you're taking money out of your drop program, and you're going to pay tax on that. And you're going to buy a camper or RV, or buy a boat, or, maybe pay off some debt. And you don't think about the impact that's going to happen with your Medicare premiums on top of the tax that you're going to pay. That IRMA, that income-related Medicare adjustment, is one of those nuisance taxes that I see again and again and again, and it's very, very frustrating because sometimes you don't even know about it till 2 years later when you get the Social Security letter in the mail. So coordinating those withdrawals, coordinating your income for your 65th year can be really, really impactful from a tax standpoint for many, many reasons.
We're having a great conversation this week here on Beyond the Money Radio and the Beyond the Money podcast. Some tax birthdays that can save you money in the long run, including turning 55, 59 and a half, 62, 65. If you're just catching up, we invite you to stream the Beyond the Money podcast. You can find this weekend show plus a full archive at the homepage. Stream it from the homepage of mycampbellandco.com. All right, Jackie, what else?
I would say the pre-RMD window. If you're less than 73, my goodness, you have some time to plan from a tax efficiency strategy to make sure that maybe you want to start taking some income and distributions, or do some Roth conversions from your IRAs before you're required to take those RMDs, those required minimum distributions. That is just a more tax efficient way to do it, and that is a very, very good time. And I want to add that I said, like pre-RMD, that's like 70 to 73 are the ages and the birthdays that I would pay attention to there, but 70 and a half is huge. You don't have to take those required minimum distributions at 70 and a half any longer. That used to be that age that IRS would make you start taking distributions from your retirement accounts. But you can, if you are charitably inclined. Probably one of the greatest gifts that the Internal Revenue Service has given to retirees is the ability to do a qualified charitable distribution. That's where you make a payment to your qualified charity. It could be your church, could be another recognized qualified charitable organization, and you're able to take that from your retirement account to that charity directly without paying taxes. That is powerful. So 70 and a half, we don't ever really hear that age anymore. But if you have RMDs and you are charitably inclined, or you're making charitable contributions, tithing or anything like that, maybe a favorite organization, local organization that you're making contributions to every month or every year, you should be having this conversation. If your financial advisor has not had this conversation with you, I would ask them why. Huge opportunity to save taxes.
It's funny, back in the day, or at least my daughter still does, she celebrates her half birthday. Daddy, I'm 9 and a half. Daddy, I'm 11 and a half. Well, it's okay to continue to celebrate those half birthdays at 59 and a half. At 70 and a half. That's okay.
That's right.
What did we miss on this list of tax birthdays that can save you money? I see a lot of great information here. How do you wrap this all up? And, what do we need to know about celebrating these birthdays that can save us in taxes?
Well, there's one more, and I like, this is my sixth favorite age to really pay attention from a tax planning standpoint. It's 75, and basically if you're 75 or older, and it's legacy planning and family tax bill planning, chances are if you're 75 or you're 80 or 82 and you still have a significant amount of assets, somebody someday will pay taxes on all of those IRAs, all of those retirement dollars that no one has paid tax on yet. So it's a great legacy and family planning, like multi-generational estate planning period. So I think that that and the new rules, I find that most people kind of missed that big tax law change back in 2020, that if a spouse inherits your retirement account, like an IRA, they are able to stretch that retirement account over their lifetime before they have to pay tax on all those dollars. But a non-spouse, child, friend, relative, anyone else inherits that, they have 10 years to drain and pay tax on every dollar in that account. And when you're talking $2 to $4 million, $5 million in your IRAs, and you may have a little bit of Roth conversions that you kind of dabbled with here and there, and you haven't been intentional with it. If your beneficiaries live in a taxable state and have state income tax on top of the federal tax, and you have a significant amount that they're going to have to take out and pay taxes on top of their other income, whether they're successful and really have high income earning years or not, I mean, that is so impactful. I just did a comparison for someone. We love doing planning, especially when it comes to taxes and cash flow. And with someone that their children were in taxable states, I've seen recently New York, California, Missouri, Colorado, and if you look at 13% state income tax on all those dollars on top of federal tax of 22, 24, 37% maybe. I mean, they're paying 50% of all those dollars that you've worked so hard for and been so careful not to spend, that now half of it's going to be going to government agencies for taxes. So again, 75 and older, those are really big birthdays, all of them, and they should be celebrated because there's really, really great tax planning opportunities with each and every one of them.
So as we kind of put a bow on this conversation about the birthdays that can save you money on your taxes, I saw a commercial that said, hey, if you call me right now, I will make sure that you have a tax-free retirement. I will build you a retirement where you don't pay taxes anymore. It sounds too good to be true. My spidey senses went off just a little bit. But is it? Can you build us a tax-free retirement, Jackie?
Absolutely can do it. If you look at what the wealthy can do differently, they can have tax-free. They can pay less effective tax rate each and every year than you or I do, Mark. And it's just about using the tax laws that are there. It's about working with professionals or a team of professionals that know how to do tax mitigation and tax reduction. It's not tax avoidance. Totally different plan there. That comes with either a green jumpsuit or a striped one. And I don't look good in orange. I said green, nope. I mean orange.
Orange.
But there are definitely tax planning opportunities. If you take the time and work with a professional or that team of professionals, you can really get strategic and tactical and get to a very low effective tax rate or a zero tax rate. I would say probably zero is not the very best place to be, but I've never seen anyone in over 33 years, Mark, say, I want to pay a little bit more in taxes.
Right. I want to meet that person, see if they exist out there. I don't think it's true.
We should do a survey.
We surveyed 100 people and 0 said that they wanted to pay more. 352-251-1015, mycampbellandco.com to get more information and to take advantage of that 360-degree retirement roadmap. If you've saved at least $500,000 or more for your financial future, no cost, no obligation to have this conversation. Again, 352-251-1015 or online at mycampbellandco.com.
And Mark, if we could just kind of summarize those 6 milestones again, I just think they're really important. I can kind of see them in my head because I've gone through them so many years. But the first one is age 55, big planning milestone. The second one is age 59 and a half. And then we have age 62 and age 65. Age 70 to 73, that pre-RMD window. And then the last one is if you're 75 or older. Those are big milestones. And they're not just, I guess, retirement tax planning isn't about just doing taxes. It's not about the tax return. It's not just about saving the taxes, but it's about the timing. It's about the planning. And that's why we came up with a 360 retirement roadmap, because I can see the vision and I know all these dates and all these tax breaks and all these tax changes in my head because I've done this for so many years, doesn't mean that everyone else sees that. And as a dear friend and consultant, a mentor of mine told me many, many years ago, you cannot see yourself in your own story or your own movie. And I heard an even better version of that lately, and it's you cannot see yourself inside the jar. So I have to have real clarity or lack of clarity there. And I'm saying you can't see yourself in the peanut butter jar, right? So you can't read the label from inside the jar. And that's what it is. You're in your own story. You're in your own financial story. You're in your own 360-degree retirement plan. And having someone that can walk along that journey with you all of those years, each and every one of them along the way, and know when, hey, there's tax planning opportunity here, which means it's going to keep more money in your pocket and more money going to the charities and the ones you love and care about the most. That is a win-win, and that is why we talk about these tax planning strategies. And clarity is the one thing that can stop procrastination. So if you've been procrastinating and you've got that book of procrastination in the back of your the back seat of your car and you haven't opened it up yet, guess what? This is a way to get past that and get some clarity, confidence, and some direction for your life, because those birthdays are going to come around whether you're prepared for them and taking an opportunity to make sure and making good decisions along the way or not. And it all starts with a phone call, 352-251-1015, or you can go online at mycampbellandco.com.
That was awesome. You ready for a tip of the day?
Yes, let's go.
All right, here we go.
Now, the Beyond the Money tip of the day.
We talked about that pre-RMD, required minimum distribution window. That is typically going to be 73 for most individuals. Some are 75. So knowing when your RMD start can be really, really important so that you have that window of tax planning. So, and don't forget, if you've inherited any IRAs, an inherited IRA has to be spent down if it's not a spouse that you inherited that from within 10 years. So I see many people that have those inherited IRAs, Mark, and they have no plan and have no idea that they're supposed to be taking required minimum distributions, or that they have just a few short years left to actually cash that in and pay taxes on it. So planning.
Such great information this week from Jackie Campbell. And if you want to get more, we invite you to make the call, 352-251-1015, or always available online at mycampbellandco.com. From the homepage, you can meet the team, see all the services they have to offer, find a location that's closest to you. You can even schedule that initial no cost, no obligation consultation from the homepage. Again, mycampbellandco.com. Well, Jackie, as always, thank you for the education and the information. And we're back next weekend. But before we get out of here, let's give you the final word.
Yeah, someone called me a few weeks ago and they asked for the retirement roadmap. And it's not just a standard roadmap that everybody gets to use and everybody applies. This is going to be something that we're going to build that's going to be created custom just for you. And, I do have a book coming out, Beyond the Money, that's going to have a lot of this in there. But why not take advantage and get some clarity, confidence, and direction, and get that customized retirement roadmap for you? If you have not taken the time to write out your age, and if you're married, write your spouse's age and kind of draw that out to each calendar year to see how that's going to impact you, your cash flow, your investments, your spending, and your taxes, now is the time to do that. And it all starts with that simple phone call, 352-251-1015, or you can go online at mycampbellandco.com. And this is Jackie Campbell, certified financial planner, certified public accountant of Campbell Company, Wealth Advisors and CPAs. Join us again next time on Beyond the Money Radio and the Beyond the Money podcast.